Hello traders, and welcome to the first video within the third section of the IPDATrader's private mentorship course. And this entire section, guys, is going to be dedicated to liquidity. As you go through the sections, right, you should now understand structure very well. You should understand point of interest very well. The very next thing for you to understand is liquidity. Then you're going to learn about confirmations, and at this point, with all these 4 topics in your head, you should be able to design a system that can work very well for you, and you can be very successful doing so. However, there's more pieces to the puzzle, such as the daily cycle, which is going to be coming up very soon as well, and more stuff. So let's actually get started with liquidity, right? As I explained in my YouTube video, liquidity is the only reason why price goes up or down, right? If we do not have liquidity, price is not going to move. It's like fuel for your, it's like gas for your car in a sense, right? If there was no liquidity, price would just move sideways continuously. So in order to move up, we need sell side liquidity, which is sell stops being grabbed first. And in order to move down, we first need to grab buy stops, which are essentially buy side liquidity. One important thing about liquidity as well is that liquidity is sort of subjective, right? You are going to have buy side and sell side liquidity at all times during the market. And it's a little bit of a subjective topic because one trader may be focused on the buy side liquidity, and the other trader may see the sell side liquidity as most probable, as a most probable target. So you need to sort of understand that. I'm just going to be giving you the information regarding liquidity, and you should then really sort of understand for yourself what you can do with that information, right? So with that out of the way, let's actually go back to the drawing board and let's start discussing liquidity. So guys, let's actually get started with the topic of liquidity. And once again, I'm not trying to hide anything from you. I'm going to be telling you everything I know about liquidity and everything that I've been successfully using for the last years to really trade the markets in regards to the liquidity topic. So let's actually get started. Liquidity. One thing you want to write down is that liquidity is the driver of the market, right? That's something that you should understand, meaning that the reason why price moves up or down is because we may have liquidity over here and then we want to take that out, or we may have liquidity down here and we want to take that out. That's the only reason why price ever goes up or down. It's absolutely related to liquidity. So with that out of the way, right, we understand that we have buy side liquidity, right? Buy side liquidity, which refers to buy stops, and we have sell side liquidity that refers to sell stops. That's something that should also be in the back of your head and something you should understand about liquidity. Now, you should also understand that liquidity is absolutely subjective, and you're going to have buy side and sell side liquidity at all times during the market, right? You may sometimes recognize that, hey, I believe we have more interest in going lower because there is more liquidity potentially to the downside than the upside, and that's sort of gonna help you with your bias, right? But you should understand that there is liquidity on both sides at all times during a market. Now, let's actually get into the different types of liquidity. And again, this is explained in my YouTube video, but we're going to be diving into a little bit more of a detail. So the first liquidity type that you're going to learn about right now is called visible liquidity. And this is much easier and simpler to understand compared to hidden liquidity, which is also going to be explained, right? But let's actually get started with visible liquidity. Visible liquidity. And we can do that. Maybe grab this right here, separate it over here. And we can now say that, hey, within visible liquidity, the only liquidity that we have is known as relative equal highs and lows. That's it. If you come from a retail background, you probably heard the idea of support resistance, double top, double bottom, triple top, triple bottom, right? And this is where this liquidity type comes into play. There's going to be times where the market is absolutely consciously engineering liquidity in the form of equal lows or equal highs, right? For example, if we see a market pushing down and we get a trade back into that, and we come over here and we create some sort of a perfect bottom, sort of a double triple bottom over here, you should be aware and you should be able to recognize that, hey, now we've created, again, imagine this is actually a perfect bottom over here, right, where we bottom out and then we move higher. You should now understand and be able to say to yourself that this is equal low liquidity, because what do we know? People that are buying this market are most likely to have their stop losses below this area because they feel safe below here, right? They're going to say to yourself, if we're going to continue up, we're going to be respecting this sort of bottom over here, right? So that's something that you want to understand. We have, in regards to visible liquidity, all we have is the relative equal high and equal low liquidity. And we're going to quickly jump into the charts to spot it and really give you some examples so that then we can continue with the hidden liquidity, which is a little bit more of a advanced topic and it's going to require a little bit more time. So we jump back and let's actually try. Again, I have not prepared any example, but it shouldn't be too hard to find something, right? That sort of illustrates that point. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, IPDATrader. IPDATrader is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to IPDATrader for sponsoring this video. And now into today's lesson. Enjoy the video. So let's see if we can find equal low liquidity. We just have it over here, right? Again, remember the word relative, right? It doesn't need to be exact, but as we can see over here, this is a mitigation on itself, right? And this is absolutely correct. If you paid attention to point of interest, you know that this is a point of interest, but at the same time, once we mitigate the block and we move away, we leave behind what is known as relative equal low liquidity. And I really like to use this sort of emoji over here. And this sort of shows me that, hey, once we start trading below this relative equal low liquidity, I know that fuel and gas is being grabbed, right? And that means that we could potentially be heading lower to then resuming up because we now have grabbed liquidity and we could be potentially expecting a shift, right? That's something that I want to keep in mind. And this is just as an example. Again, it doesn't need to be very exact in regards to the pip wick amount and that sort of deal. It just needs to sort of be easy to see for the retail eye, and I can very well imagine retail thinking that this is some sort of support that is potentially going to hold, right? So we understand that. Let's try to find more liquidity, more relative equal high or low liquidity. Let's see over here. This is not the case. Well, it was the case right here. If we look at this over here was some sort of relative equal lows at the time, and as you can see, we move away, and this movement away is called inducement, right? And you want to write this down, inducement, which is when we induce people, right? We're inducing buyers over here. We're really sort of the market is really sort of trying to convince buyers that we're going to be going higher, hence why we get that double bottom form, which refers to the relative equal low. We move away for a bit, we give them that little cookie, and then look at this way, guys. This is not coincidence, this is not random. we get a huge wick down that reaches below the equal lows over here, right? We can write them down like this. We know that this is equal low, and we get a big wick that really trades below the equal lows and aggressively closes above the zone and sort of continues higher, right? Because the market can now continue higher since the sell side liquidity over here in the form of equal lows has been taken out. So let's try to find a equal top, right? Sort of a equal high liquidity. Let's see over here. See what we have. Let's see what we have. I'm trying to find an example over here. Let's see. Let's actually see what's happening. Well, we can clearly see also over here, right? We have some sort of triple top occurring. If we draw a rectangle over here, this is some sort of equal tops right here. So we know right above it there's going to be plenty of stop losses and people are going to be looking to sell at those prices, right? So we can denote this just with a line across, and whoops, my bad. We can sort of denote this like this and say to ourselves that, hey, this is buy side liquidity or relative equal high liquidity, which we then, if we look right, once we come back here, we just trade above it, right? We barely reach above it over here. As you can see, this was the high at the time. If we look right, we reach above that, we mitigate another block a little bit higher, and we take those people out, those sellers that are looking to sell at this price over here, because they see that triple top and they expect that as price comes up, it's going to reject again and form a sort of another top and continue dropping. And actually that never happens, and price really shakes that out and then moves lower, right? Because we have now taken fuel, which again can be denoted with this emoji over here of the plane, and then we move lower. That's sort of the idea that you need to understand. And let's actually now keep moving on towards the different types of liquidity. So now you know about relative equal high and equal low liquidity, which refers to the visible liquidity. And we're going to go back, we're going to get rid of this, and we're going to get started with hidden liquidity, which is very important. And we do have different types over here, so this is going to take more time to explain, right? So you need to understand that above and below every swing point, there is absolutely liquidity, right? So every swing point is liquidity at the end of the day, right? So what do we mean by that? Well, every swing point in the market, and we're going to be doing something like this, meaning that above this swing point is liquidity, below is liquidity, and so on and so forth, right? Above and every single swing point, we do have liquidity, and you need to be aware of that, right? That doesn't mean that every single swing point is going to get taken out, right? For that, as once again, you need to understand structure, you need to understand point of interest, you need to understand liquidity and confirmations, right? But you should understand that above and below every single swing point, we're going to have liquidity. That is something that you should be aware of, right? And do not get confused with this, because you now may say to yourself, well, how do I trade, right? If every single swing point is liquidity, how do I trade? And do not worry, it's just a liquidity type that you need to be aware of. That doesn't mean that every single swing point is going to get taken out, right? And let's actually go back over here and let's sort of give you a definition of a swing point, right? So let's actually do a swing point over here. Let me grab something like this just to give you an example. We then can do some sort of green, sorry, to denote a different candle. And we continue green. And this is something that would be considered a swing point, right? Right here below this low, we have a swing point. Why? Because we have a change in direction. If we were to grab the pen tool and we follow sort of what's happening here, you should be able to see that we were coming down and now we're going up. Hence, we form a swing point over here. And the same thing is going to be occurring for the opposite swing point type, right? If we do something like this, let's say a bullish candle, and all of a sudden we get a shift in direction, right? And we start to move lower. let's say something like this, and then we continue lower, right? This is going to be a swing point, a change in direction, and you should be able to recognize that we do have liquidity over there, right? This is a swing point liquidity. And why is that so? Well, the rationale behind that is because we need to understand that the market is fractal, and above and below every single swing point in the market, there's going to be people that have stop losses, right? They may be selling, so they're going to put the stop loss over here, hence why we push up over here and take them out and take that swing point out, right? There's going to be people that have bought maybe over here, and what are they going to do with the stop loss? Well, it's going to be placed right below the swing point, which is why a swing point is liquidity, right? And again, I don't think we need to take much time explaining and sort of showing swing points, but let's actually do that. So we see over here that we have a swing point, meaning we were pushing up and we changed direction. So you know that above this high we have liquidity, below this low we have liquidity, above this high we have liquidity, and this is also another type of liquidity that you're going to learn about very soon. But for now, focus on the swing points, right? We understand that. We also know that below this low we have liquidity, hence why we move up, and then we sort of engineer more liquidity, creating some support, move away for a bit, mitigate a block, and then we move down and take that swing point liquidity out, right? Same scenario over here. Liquidity swing point high, right? We move away for a bit and we take that out. That is liquidity being taken. You need to be aware of that. As we trade below and above swing points, your mind should tell you that, hey, we are taking liquidity. That doesn't mean that sort of we've taken a swing point, now we're going to reverse. No, it's just something to know that above and every single swing point in the market, we do have liquidity. The next type of liquidity is still considered hidden liquidity, right? So let's get rid of this. Let's write hidden liquidity once again. And now you understand that we above every swing point and below every swing point, we have liquidity. The next one is called trendline liquidity, which is essentially what the name really the name kind of gives it away, right? Trendline liquidity is liquidity in the form of trendline, whether that be a bullish or bearish trend line, that doesn't really matter. You should understand that retail traders are told from the very beginning that they want to be selling bearish trend lines and they want to be buying bullish trend lines, right? And you're going to see that in action happening very often. And this is going to be a great type of liquidity for you to spot on. I really like this type of liquidity. I work with it very well and I make this work essentially very effectively. So let's imagine we have a market like this, right, where we are pushing up, and all of a sudden we start getting compression, right? Meaning the distance between the highs have been decreasing, but we're slowly still moving up. Well, what do you expect that retail is going to be doing once we trade back here, right? They're going to be willing to buy. They are absolutely going to be waiting for this price over here. And as we trade into the trend line, they're going to be taking buy positions to continue higher. However, most of the times, what the market will do is potentially induce them once again, right? And this is where inducement comes into play. Inducement. We are probably going to make them want to buy even more as we trade into the trend line, with a potential strong bullish candle forming, right? Maybe we top the trend line, we get a bullish candle like this, and now every retailer is saying, okay, bullish candle at the trend line, let's buy the market, right? And what you will find is that we will most of the times aggressively take that away into a real point of interest over here potentially, and then we may move higher, right? But you need to understand the process of inducement. This is important, which is essentially, as the name says, inducing people to either buy or sell in a particular scenario, right? In this case, since we have a bullish trend line, people are going to be expecting bullish price action as we hit the trend line, and they're going to be buying the market. Same thing goes for a bearish trend line, right? We may have price coming down, we start getting some sort of channel creation, formation, and then we move away. So we have liquidity all across here. We know that retailers are going to be trying to sell that trend line, especially at this particular price point with the stop loss just above the trend line. And as price comes back into that, it's going to have some sort of reaction, meaning inducement. They're going to be funneling into sells over here, and they're going to get taken out most likely into a real point of interest. Maybe there's more liquidity over here in the form of relative equal highs. We take those two types of liquidity out. We take also a swing point liquidity. So we're fulfilling liquidity criterias, and then we really move lower because we now understand that, hey, the market has fuel and we can potentially continue in a opposite direction. So let's move on into the charts and let's actually try to find that over here. And I actually had a great example over here. Once again, if we look here, what do we see? We see a trend line, right? Once again, it doesn't need to be very exact in regards to the touches, right? So you can see we do have some touches over here, but it doesn't need to be very exact. You sort of need to understand where the trend line is sitting because you're going to have multiple of those, and as you flick through time frames, they're going to be telling you different things, but you need to focus on the time frame you're most comfortable working with and essentially makes most sense to you, right? We do have a trend line liquidity sitting over here, and we know, look at this, we get some sort of bullish candle closing right above it. People are starting to take buys over here, and they just get taken out over here with this big bearish candle into a real point of interest, such as this one over here. And now we're sort of potentially shifting, right? So keep that in mind in regards to trend line liquidity. Let's look for more examples over here. Let's see. This could potentially be another trend line, right? You can very well see how we sort of have three touches over here, right? Or even more, depending on how you look at it. We have rejection, 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 and as you can see, really minimal reaction and blow through the liquidity. And now you understand why this mid POI actually kind of worked and provided you moves down. Well, it was because we actually had trendline liquidity over here that has been grabbed, and now we can continue into the opposite direction. Let's try to look for more examples. Let's see. Let's actually see. We do have another trend line over here, right? We can see we have three touches, 1, 2, and 3. We tap it, we move away a bit, and we blow that through. You can see the pattern here, right? And that's pretty much it in regards to trendline liquidity, right? You want to label that. You want to say, hey, this is sell side liquidity in the form of trendline liquidity. And that is it in regards to trendline liquidity, right? You need to sort of zoom out and try to see where we could potentially be having trendline liquidities. We have one over here. And again, guys, I'm not making this up. We hit it, we hit it, we hit it. It actually works here very well, right? This is those times where the market actually gives you, but then we come right back up. We blow through it. We barely spike above it. We take out swing high liquidity, trendline liquidity, potential relative equal highs liquidity. We spike through it and we move lower. So that is essentially everything there is to trendline liquidity, right? You need to be able to spot them. They're going to be all across your chart. You need to understand that a bullish trend line like this one is considered sell side liquidity, and that once we take that away, we have a fulfillment for price to reverse. Same thing goes for the bearish trend line like this one over here, right? We have the touches, we induce, and we blow the trend line. That's pretty much it. And this is considered a buy side liquidity, more specifically trendline liquidity. So let's now go back to the drawing board. Let's get rid of this and let's talk about the other type of hidden liquidity, which is your session liquidity. And this is the more this is sort of the main one, right, that you want to keep a track on. And this actually refers to Asia lows, Asia highs, Sydney lows, right? Sydney high, London lows, and London highs, right? And you need to understand that during those during those sessions, there's going to be highs and lows that are going to be made, right? And you should understand that sessions have tasks to fulfill, meaning that one session is trying to liquidate the other or potentially prepare uh, liquidity and engineer liquidity for the upcoming session. So you want to be paying attention to those types of liquidity pools, right? Asia lows, Asia highs, Sydney lows, Sydney highs, New York lows, New York highs. Every potential session that you can think of is going to have a high and low of the session, and those are liquidity pools. So if we see, for example, that let's get rid of this. You should write that down, by the way. Let's see that we have for example, a Asian range like this, right? Potentially like this. This is your Asian range, starts over here and ends over there. You should understand that this high over here is a pool of liquidity, and this low over here is a pool of liquidity. Let's now go back into the charts and let's see that idea over here, right? So for the Asia high and low liquidity, so you can see I have it written down over here. I know that all these are Asia high liquidity. Why? If I go lower time frame, you are going to see it. You're going to see how we have a Asia high over here that has not been taken out. Hence, we have liquidity. Same thing over here. Same thing over here, and same thing over here, right? We have Asia low, we have Asia high, so I understand that within the range that I'm playing in today's price action over here, right? This low and this high, I know that this particular high is liquidity. I know that right above that high, we have another liquidity pool. So pretty much you can that way be tracking your liquidity pools. We do have a Asia low over here, right? And it's going to be easy for you to denote those Asia highs and lows if you have this indicator, which is shown in the YouTube channel. But if you do not have it, you can do it manually as long as you know during what time in your country or time zone does the Asia session occur, right? And you want to be doing really the same thing for the London session, right? You want to go to your London session. For example, for me is this particular session in this case, and let's get rid of this one over here. And if we look, we can see that this high over here was made during London. So I can go ahead and label that, right? I can say that this is London high and that I want to be paying attention to that. Once again, it doesn't mean that London high cannot be a point of interest for you to try and take sales. It just means that you have to understand that this is a liquidity pool that may potentially want to get taken out, just like in this case, right? We have a London low, we move away, we trade New York, kind of choppy price action, not really much happening, and then Asia comes in, takes the high, takes the London high liquidity and creates its own Asia high liquidity that was left behind, and that can potentially be targeted in the future, right? You need to be able to spot those things, right? You don't need to go crazy about it, about labeling every single London low, London high, New York low, London high. It's just a nice thing to know and sort of a thing that can give you extra confluence and extra help within trying to spot or your liquidities. So let's actually go to a random pair, right? I just thought about this. Let's go to obviously a forex. Let's go to this one. No, USD, no. AUD This is a pair I probably never looked at in my life. And let's try to go through a thought process, meaning let's try to see what liquidity we have over here, right? I'm going to be sort of walking you through this. However, we can see that how messy this price action is, right? And you don't have to be trading during periods of time where you don't like the price action. That's why we have multiple pairs to watch out for, right? You don't need to be trading this if you don't feel like you know what's happening over here. But let's actually go ahead and just looking at this time frame, let's see what kind of liquidity types we do have. So let's get started. Once again, I can clearly see that we had some trendline liquidity over here, right? Trendline liquidity, and now my eyes may want to be magnetized towards an origin, maybe potentially this FU candle. I would have potentially be looking at this to potentially take trades, right? However, that is another topic. Let's focus on liquidity over here. That is trendline liquidity. We also have trendline liquidity over here. You can see how precisely, right? This is not coincidence or whatever, right? If we actually draw it properly, you can see how we very well create a trend line. We just spike below it. Again, if I turn off the indicator, you will see it much better. You can see how, how we spike below the trend line and we move higher, right? This is something you want to pay attention. We actually trade below it for a second, take out that liquidity, and we move higher. Same goes for the opposite, for this type of trend line liquidity on the top, right? What else do we have in regards to liquidity? Well, we have swing point liquidity all over here, right? Let me actually grab this tool. We have the swing point liquidity over here, swing point liquidity over here. That gets taken out with this high over here. Then we move away a bit. Then we respect this high. We move lower. And let me actually see. We respect the swing point liquidity. So this is still liquidity for you to consider. It doesn't mean that you cannot take trades within those POIs. It just means that you want to be paying attention to the liquidity types that you have, right? Now we understand that we have trend line liquidity on the bottom, trend line liquidity on top. We have swing point liquidity all across here. If we turn off on our indicator, we could also see at the time that this was a Asia high liquidity sitting over here. What else do we have? We have a Asia low over here, right? We have Asia low liquidity, another Asia low liquidity, and another Asia low liquidity, right? This is where you quickly realize that liquidity is everywhere in the market, right? And again, this is buy side liquidity above that trend line, buy side liquidity. And we do have sells. We did had, because it got taken out with that wick, we did had sell side liquidity over there. So this is where you see liquidity all across your charts, but it's about trying to create the story that makes sense for you. What do I mean by that? For example, if I was to be watching this market, I could have very well seen that we have a break over there. I want to be buying at discount prices. So I drag my fib from the bottom to the top. I can see that we're never below the 62%, but if we were ever to make it below that, I would be watching, for example, a POI over here, right? I want to always be denoting one at close to the origin. This is a price point I would be watching to potentially see if we can take liquidity into that. Meaning if this liquidity was to get taken out and instead of pushing higher, we were to push off lower, I would have said to myself, okay, we are hitting this block. We've taken trendline liquidity. My liquidity aspect is fulfilled. This is a valid POI for me to watch, and liquidity aspect is also met. So, but once again, this is not the only POI I would be watching out for, right? Because we understand that price will not always retrace the entire impulse. And if you believe that, you're going to be missing trades non-stop, right? As long as we are below the 62%, we're considered in a discount price for buys, and that's when you want to look for buys, right? So what else do we have? We can also see that we were engineering liquidity on the way up with that compression. So really, all these POIs at this region, I would be very careful, right? I would mostly be looking at this particular IFC structure. And once again, if you follow the sections, you know what an IFC is, and I would be watching that area. Why? Because it's sitting below trendline liquidity. And if I can see, for example, right, that we also engineer some sort of relative equal low over here, right? Meaning that we get some reactions happening over here, and inducement, meaning that we create the equal low, we move away for a bit. I understand that people are getting into buys, and then we take that into our point of interest. Well, that's going to be phenomenal and a great confluence for me to try and take buys at this area right here, right? So this is going to be it for the first video within liquidity, right? We're going to be getting more in depth, and I'm going to be trying to give you more information, but this should function as a okay introductory video in regards to liquidity, right? What you should know at this point is that liquidity is the only reason why the price ever goes up or down. For price to go up, we need to have liquidity grabbed to the downside, and for price to go down, we need to have had a liquidity grab to the upside. It's fuel for your market to move up or down. That's something that you should understand in regards to liquidity. What else you should understand? Well, you should also understand that we have buy side liquidity and sell side liquidity. right? And sell side liquidity refers to the sell stops, right? Stop losses below lows that are going to be taken out. That is considered sell side, and the opposite kind of works for buy side, right? Buy stops above highs that are going to be taken out in the form of liquidity. You should also understand that we differentiate between two main types, which are essentially hidden and visible. We've been discussing that in this entire video, so I expect you to understand that at this point, right? Hidden is considered your session time liquidity, right? Or session liquidity, your swing points and your trend line. Visible is much easier. It's just the relative equal highs or lows, double tops, double bottom, support, resistances, whatever you want to call it. Don't forget that liquidity is subjective at the end of the day, and you're going to have liquidity on both sides at all times in the market. So with that out of the way, let's actually finish this video, and I will see you guys in the next video.